So good morning, good afternoon, good evening, wherever you may be joining in the world. My name is George Radford, and I'm delighted to be the host today for today's webinar. I'm also joined by Spencer Grekoski, and albeit this webinar today is more focused towards a number of our Nigerian clients, the content will be relevant for any international investor, wherever you are located in the world. We've got hundreds, over 400 people registered for today's webinar, and I see there's a number of people across Africa, across the Middle East, some in Asia and in Europe as well. So a very warm welcome to you wherever you are in the world. So just to again introduce, I'm the Managing Director and co-founder of the RPA Group, and Spencer Grekoski is Associate Director of the company, and Spencer predominantly looks after our clients in the Africa region and very much so in Nigeria. Just to introduce you to some of our other team members in Nigeria, we've got Kamsi Sokwe, who's in Lagos. We've got Hadisa Atta, who's in Abuja, and George Osunde, who's based in Dubai. So we've got a very professional and dedicated team helping to service our clients in the Nigeria and West Africa region. So in terms of today's presentation, what we're going to aim to do, and Spencer, please let me know if we miss anything or I miss anything, but to try and cover the key points, the agenda points for today's webinar. So have a quick look at the outlook for the UK economy in 2025. We'll also reflect on 2024 and how the UK economy and the property market performed last year. We'll have a look at the capital value appreciation, the forecast for the next 5 years, and look at what sort of returns clients can expect to make. We'll also try and simplify the process and explain in very layman terms how the process works and how UK property investment could work for you. And we'll also have a look at UK mortgages, the availability of those mortgages for our clients, specifically based in Nigeria or Nigerian expats based in Africa or anywhere in the world. And then we'll have a look at a new product launch at the end of the presentation. Spencer, is there anything you would like to add?
No, I think I covered it all there. And then if anyone has any questions, just so it doesn't get too repetitive, please don't wait until the end. Throw them in there just to make it a bit more engaging, and we'll answer them as we go through.
Good stuff. And Spencer, as the questions come in, please just let me know. Make it as interactive as possible. So if I may, I'll just start by giving some background to the RPA Group. So we've got a global footprint. We've got offices in the Middle East, which is our head office, the UK, and Nigeria, which we're very excited about, having opened our Nigerian offices last year. And as you see, we now have personnel on the ground in Nigeria to better service our clients, but also for credibility. But we've got a global footprint, and we've got clients all over the world. We've historically now invested over £1.3 billion on behalf of our clients. A great accolade for our business is that 65% of our clients invest in more than one property with the RPA Group. And also, we're really delighted about our Trustpilot rating, 4.8 out of 5. We're very transparent in what we do, and that's a great accolade for our business. The three founders of the business, Richard Bradstock, Giles Ledbetter, and myself, we all have over 20 years of property investment experience. I'm personally a chartered surveyor, so professionally qualified and still a member of the Royal Institution of Chartered Surveyors. And I think a really big selling point for our clients, which I know that your clients very much were delighted by, Spencer, in Nigeria, was having our local office there now and our representation on the ground, just to better service our clients. So what do we do? We essentially help clients wherever they are based in the world to safely, securely, and efficiently invest in the UK property market and benefit from having exposure to the UK property market. A very, very big part of our business is the research and the due diligence at the front end. Like with any investment, you know, the research and the due diligence that underpins it is absolutely fundamental. So we're very, very focused on that to ensure that any product we bring to the market is best in market with the best developers in the best locations, that's going to deliver very strong rental returns for our clients, but also very strong capital appreciation. In terms of sourcing residential investments, that's a key part of our due diligence as well, working with developers and sourcing, you know, the standout developments in the market. The investment advisory side is very much working with clients, understanding their requirements, what they're trying to achieve over the next 2, 5, 7, 10 years, and tailor a solution to meet their investment goals and their investment horizons. The conveyancing process is something that we will facilitate with our legal partners, with the solicitors here in the UK, to ensure that the transaction runs as smoothly as possible and that your interests are protected. We work directly with banks and mortgage brokers to provide our clients with mortgage solutions. We have a lettings and management business here on the ground in the UK. So we will manage the client's assets, secure the tenants, and provide a full turnkey solution on that side, rental collection, and pay those funds into your designated bank accounts. And then on the resale side, you know, when you wish to liquidate your asset and resell it back into the secondary market, then the RPA group is here to facilitate that process for you and resell your property.
Before you touch on that, we have a question from Shugan, who said, how do you mean in regards to research and due diligence? What are you looking for when you find a development to bring to market?
So a whole host of things, which probably overrun on the webinar if we go into all of them. But the fundamental ones really are developers' track record, capitalization, proof of funding, proof of planning, making sure there's no conditions attached to the planning, and just ensuring that clients are protected in the contracts, the developer's going to build and they're going to deliver a very strong product. Those are the fundamentals, really. There's obviously a lot more, making sure it's priced correctly, making sure there's sustainable rental markets and so on and so forth. But the fundamental focus really sits with ensuring it's a safe and secure developer and they're going to build the product. Thank you for your question, Jürgen. And really just to sort of continue on from that point, that's why typically we like to work you know, with world-class developers and quite often listed developers here in the UK, you know, Barratt, Berkeley, FEC, Far East Consortium, all listed developers, some of the biggest developers in the market, which ensures that our clients' interests are protected and they get a standout product. We don't just work with big sort of multinational listed developers, we do also work with a number of medium or SME developers, you know, who offer our clients a more boutique product in you know, key locations, maybe where some of the bigger developers aren't going, the likes of King's Crescent Homes as an example. So we'd like to think that we've got, you know, a product for everyone within reason, and we'll tailor a solution to meet our clients' investment requirements. Spencer, maybe I can pass over to you to talk over property as an asset class and why UK property, and I suppose tailor that to the conversations you have with your clients in Nigeria on a daily basis.
Yeah, definitely. I would say, well, property as an asset class, doesn't matter where in the world we're looking, but specifically looking at the UK, is from a long-term wealth generation perspective. You buy an asset, you buy the right location, the right developer, you hold that property, you will see very good returns, be able to have things to pass to the children. But also, more specifically for our clients in Nigeria, it is an investment. They want the best return on their capital. As does anyone else. But really, the main drivers for conversations that I have is they want exposure to hard currency into income-producing assets, such as UK property, where they're able to receive GBP income to help offset some of their international expenses, whether it's school fees, rental expenses, and also to supplement their income in the future. And we're able to facilitate that for them through property investment. But then just touching on some more of the points, not going to go through because you see them on the screen there. It is a safe, tangible asset. You could see it, you could touch it. You don't have to worry about someone going online, making a tweet, and you lose 30% of your portfolio. It's there, and it's behind you.
Yeah, indeed. And, more specifically for Nigerian-based clients, got their own businesses or work for Nigerian companies and predominantly receiving Naira-based income or Naira assets. Clearly the Naira has been very challenged over, the last 5-10 years, which has significantly decreased client spending power and overall net worth. And, investing whenever that time comes for you to investing in tier one markets with a basket currency like GBP, or USD for that matter, but in this case GBP, it really just creates a fantastic tool to safeguard your investments for your retirement planning, succession planning, education planning for your children. As you mentioned, Spencer, hard currency income, and where better place to do that, really, if you look at historical trends, where better to do it than the UK property market. So I think we've covered quite a lot of this, Spencer, in our conversation there, but people really gravitate towards the UK for a whole host of reasons, and they're often the same, but some are quite personal. It's really that stability, the strength of the economy, the legal protection that the conveyancing system offers to clients, the fact the market is heavily undersupplied still. There's a real dearth of good properties coming to the market and a real dearth of supply. So, that supply and demand imbalance is, hundreds of thousands of units a year, which just aren't being corrected. World-class education facilities, obviously, the infrastructure, the access to global markets through our air travel. Obviously, if you're based in London, Heathrow, Gatwick, you can go anywhere in the world, and very strong population growth. So, as I said, everyone's got their personal drivers, but I think those are the sort of key fundamentals of why people invest in the UK property.
Even conversations that we had, which is not so much the investment side of things, but there's usually a few markets people consider from Nigeria when investing internationally. But funnily enough, you'll have a lot of people that just like the UK is technically in their backyard. They're on the British Air BA flight, 6 hours. You can go to your property, see it for the day, fly back, and you're in the office in Abuja on Monday morning, just giving you that extra bit of comfort.
Yes, indeed. Instead of much longer trips to the US, which
time zones.
A lot of our clients like going that way as well. Each to their own. UK is very convenient, isn't it? Popping over for the weekend, doing some shopping, catching up with the family, going back, whatever it may be. But we're very well connected. Like any country, there's always challenges, but we're in a decent place, I would say, right now, the UK economy, and we've got a very compelling outlook for the next few years. So in terms of 2024, just mindful of time. So the economic growth in the UK, 1% GDP growth. Base rate came down. The Bank of England rate 4.75%, which is positive, and a trend we expect to continue moving forward. Inflation came down to 2.5%, the government's target. So that really was the trigger for the interest rates. The Bank of England started to reduce those rates. It was delayed really just because wage inflation was so strong. Otherwise, it would have come down more aggressively, and hopefully we'll see that happening, which is expected over the course of this year. A net investment 1.8%, which is obviously very positive. Just one point to mention in terms of other stuff that happened last year, specific to the property market, is the autumn budget did slightly increased the stamp duty levels, reducing the typical stamp duty from 3% to 5% in terms of the surcharge. And, albeit that's not ideal, the UK market from a transfer tax perspective still remains remarkably good value and very, very competitive when compared to other tier markets out there. So we're not so concerned about that, and it doesn't really have a significant impact on the overall return on the investment. And the good thing is the government didn't tweak with the capital gains tax laws, which is obviously would be far more punitive. So all in all, I think it was a good outcome, the budget, and still remains very positive for property investors. So the property market itself, I think probably just to reinforce what I was saying there, nationwide growth 4.7%, which is very, very strong given some of the headwinds that the UK economy and the property market faced last year. Sales up 30% in 2024. The best performing regions, North, Northwest, West Midlands, areas like Manchester and Birmingham, two of our key markets, and rents up, according to the Office of National Statistics, up 9.1%. So all in all, a pretty positive year for the UK economy and the UK property market. Spencer, any comments?
No, I think it's just, especially looking at that chart, comparing it, if you're going back when we were doing these in 2022 or even 2023, the negative press that was coming out, the market's done, this and that. We were always saying, and just reiterating our point of, now is the time to buy, because even in 2023, when we were saying it, things were quite flat because there was a lot of uncertainty with interest rates. But as we know, what the UK always does, it always recovers, and we're beginning to see that in 2024, the increase in prices, not your Nigerian 50, 60, 100% returns per annum, but relative to the stability and safety of the market, it's very good returns. And in the coming years, we're just going to see the property market continue to rise. So there really is still that opportunity of, you don't have the uncertainty of what if the market doesn't go up. It is going up, and in the coming years, we're going to see even more dramatic growth.
Yes, yeah, absolutely. And of course, there are lots of other markets out there in the world, and everyone's got personal reasons for investing in other markets, wherever it may be. We still very much favour the UK. It's still the number one property market for investment globally to worldwide investors, and clearly there's a strong reason for that. So in terms of the outlook for this year, so economic growth expected to almost double, up to 1.7%, still not blow the lights out, but stable and secure and moving in the right direction. We're expecting a number of cuts, up to 4 cuts in the Bank of England base rate. A lot of analysts expecting that to come down to 4 or sub 4% by the end of 2025. Inflation dropping off slightly, 2.4%. And net investment 2.3%. So that's almost doubled from last year's figures. So overall, I'm not going to lie, I'm quite surprised, as you said, Spencer, compared to where we were sitting 2 years ago, a year and a half ago. A lot of negative press, and the UK economy and the UK property market has largely weathered that storm pretty well, especially in comparison to other countries and markets out there. So let's have a look at the outlook now for the next 5 years for the UK property market. So this is based on regions. So I'll just draw your attention. Sorry if these slides are a bit small on your iPhone or whatever device you're using. The UK property market expected to grow by 4% this year. Overall 5-year growth just over 23%. There are a number of markets and regions that outperform, the Northwest being the best in terms of overall performance, expected overall performance, 29.4%. The West Midlands, Birmingham as an example, Northwest obviously being areas like Manchester, West Midlands, Birmingham, 26.4%. The Southeast, not faring quite so well, 17% plus, and London, pretty similar levels. There are a number of major property consultancies out there who are a lot more bullish on London, given that it's remained fairly stagnant for the last few years and represents, relatively good value still compared to other major cities out there. And they're very bullish on the performance of London over the next 5 years. I personally expect the regions to outperform as per this chart here. But I think if you buy well in London and you get good value in the right locations, you'll still make very good returns. And we know that London is very good for rentability as well, with the booming population. Any observations, Spencer? Any comments?
No, I think you touched on everything really, really well. I do believe London, if you're looking purely at a wealth preservation standpoint, you've built your funds, you just want somewhere to hold them where they're safe. I think it's one of the best markets in the world. But if you're in my opinion at least, if you're looking to accumulate wealth and see the best return on your capital, have your money working the hardest, you need to focus on the regional cities where there's just more going on, more investment coming in from the government.
Yes, exactly. And ultimately a lot of our clients will buy multiple assets, and there's a place for London in every portfolio if one can afford it. And depending on clients' budgets, having that diversification with some London, some Birmingham, some Manchester, some Brighton, wherever it may be, it creates diversification within diversification, doesn't it? So moving on to our next slide. Any questions that have come in, Spencer?
There's a lot of questions coming in regarding mortgages, if it's accessible for Nigerian residents. And I think it does depend on individual circumstances and requirements, but simply, yes, mortgages are available. We do work directly with Nigerian banks in the UK, GT Bank, Access Bank, Zenith Bank, First Bank, as well as various other private lenders. So we would need to sit down, understand your requirements, the loan amount, and then we would search for the best option for you. But quite simply, yes, there are mortgages available.
Yeah, indeed. Just to add to that, I suppose, because it was one of our key points, so thank you for that question. FID Bank was another, First Bank that you mentioned, FCMB, Standard Bank Isle of Man, or Stanbic as they are in Nigeria, Standard Chartered Jersey, some other private banks, some other alternative lenders, offshore Channel Island lenders, Royal Capital, there's possibly Hampshire Trust Bank. There's a number of lenders outside of the Nigerian banks as well. The options are more limited for Nigerian-based clients, just because the options are more limited for any expat. Even if you're a British expat based in most countries in the world, your lending options are more limited. You generally cannot access high street banks like NatWest, HSBC, Lloyds, Barclays, Halifax, Nationwide, the key lenders in the UK property market. They're just not accessible typically for international clients and British expats for that matter abroad typically. So then we have to go to alternative lenders. So I would say, on any given day, there's probably 10, lenders out there for our Nigerian-based clients. And, depending on which lender we would look to go to would really come back to the client's specific financial circumstances, the property they're buying, the value of that property, the loan size the client's looking for, and so on and so forth. The purpose of the mortgage, residential, buy-to-let, So it's very much a discussion that needs to be had on a one-to-one basis. I would say indicatively rates, I think we mentioned we were going to talk about that, Spencer. Probably the best rate you're going to get currently is around 6% with a decent loan size, pushing up anywhere probably in the region of 8%, at the higher end. So, but it really does depend on the client. Okay. Just mindful of time here, almost half an hour, so we'll skip on. This quite simply, just to summarise, average rents in the UK residential market expected to increase by 4% this year. Zoopla rents are set to outperform capital values over the next few years. So what we're typically seeing is, rental values increasing quite significantly, capital values keeping a pace, but not quite as much. So, and the best performing market overall, you probably can't see this, but these are all the different subsectors of the UK property market: commercial, retail, industrial, and the best performing market on there is the Northwest residential buy-to-let market, which is great, obviously, for any clients who are currently looking to invest in the likes of Manchester, which, you know, firmly sits in the northwest of England. We will share the slides. They will be available to all attendees. If you don't receive them, please contact us and we will happily share them with you. And then you can have a look at some of this information in a bit more detail. Appreciate we're kind of brushing over some of it. Spencer, you know, long-term, you mentioned long-term capital preservation, long-term wealth generation. I think this chart is pretty powerful in you know, summarizing that, reinforcing that.
Yeah, definitely. It just goes to show this is what we look for with UK property, is specifically a mid to long-term investment. It's not something you buy, you flip, and you hold it, you will make money. And these charts just emphasize, you can see it's outperformed most indexes globally, just because of the stability of the market.
Yeah, indeed. So just to explain, it's 70-year performance across a number of different asset classes and a number of different indexes. In UK property, average annual return 7.3%, outperforming all of them. Okay, let's have a quick look at Manchester. So coming back to one of the earlier questions from Shogun, I think it was, Spencer, you know, due diligence, what do you look for? So outside of developer side, obviously you've got to look at the market side. You know, what's driving property markets, what's driving property values, what's driving rental demand. And, you know, there are some very sort of similar trends that you'll see, you know, where there is a booming population, a growing population, a young population. That typically is good for property markets. It increases the demand. Okay. Where you have a high concentration of very strong world-class universities, where you have a high number of students, where you have a high number of international students. You look at Manchester, 100,000 students, over 100,000 students, of which over a quarter, 27,000 of those are international students. That pumps a huge amount of wealth into the local economy, and a lot of the skill set will be retained in that workforce when they graduate and they go on to work and stay in Manchester and further fuel the growth of the Manchester economy. So good university, good education, as we know, is so important anywhere. But when we're looking at property markets, it's fantastically powerful for the local economy when those students graduate and they bring a wealth of money and investment into the city in which they're based. Obviously, we look at the economic performance of cities and the growth. Manchester's growing rapidly, 32% economic growth over the last decade, and it accounts for 2.7% of the overall GDP for the UK economy. 85 of the FTSE 100 companies, so 85 of the biggest 100 companies in the UK have a regional headquarters in Manchester. You know, and it's the second biggest financial centre outside of London, as we know. So, you know, the economic part is crucially important. Just to put it in context, like London's GDP contribution is about 10 times that. About 22% of the UK GDP comes from London, 2.7% from Manchester, about the same from Birmingham. But nonetheless, you know, these are still big figures in terms of the strength of the city. We're looking at average yields around 6.7% in Manchester. House price escalation, 29.4% over the next 5 years. Home ownership rates, 37%. So what's that show? That shows this is a very strong rental market, which is great, obviously, for our investors and for landlords. Rent set to increase by over 20% over the next 5 years. Significant undersupply, 170,000 new homes required by 2038, and significant infrastructure improvements going on Infrastructure is so important. The easier it is to get to a city, the more people are going to gravitate towards it, the more businesses are going to relocate to that city, because it obviously facilitates economic growth. So 2 major projects. One we're going to look at in more detail, Spencer, in a second when I pass over to you to talk about the £4 billion Victoria North regeneration project, which is a joint venture between FEC, Far East Consortium developer, and Manchester City Council. £4 billion GDV, and it's the largest regeneration project in the north of England currently. And also the expansion of Manchester Airport. Manchester Airport, for those that don't know, is currently the 3rd biggest airport in the United Kingdom. London Heathrow, London Gatwick, Manchester. And that airport is expanding, which will significantly increase capacity by 2030. So that's not an exhaustive list, but it shows you some of the key things that we look at and some of the detail we look for when we're analysing these markets for property investment purposes. Spencer, if I may, I'll pass over to you to talk over the Kingfisher, which I know we're so excited about for our clients as our new flagship Manchester development.
Yeah, Kingfisher is fantastic, especially being able to go and see this site and this large regeneration and the actual scale of it and the vision and the plans from the developer and also the city council. It really is, it is quite special, and really happy to be able to offer that to clients. But apart from the regeneration in itself, arguably the most important part when looking at any type of property investment is who's behind it and who's the developer, that's their track record. So Far East Consortium is a Hong Kong listed company, has been for around 55 years. They're big operators in the retail, commercial, and also the casino business. They've done projects in the UK, Australia, Hong Kong, Malaysia, and they were a big part in Canary Wharf as well. So a lot of those high-rise buildings that you'll see, those are FEC developments. And being a listed company, and why it's important, is the developer's so well capitalized. So any funds that are invested from investors throughout the build period are fully protected. So there's zero capital at risk. So you know your money is safe, and you know the developer that you're working with delivers, and they have a track record to prove that. And on here, if you could see the screen, this pinkish orange color, this is Victoria North. So what the developer and the city council have done is they're essentially building out the city centre into an entire new district. So Victoria North is going to be, there are 15,000 new homes coming up. There's schools, healthcare facilities, restaurants, bars, essentially, again, building out that city centre. And if you can't really see it on the map here, but if you zoom in on this, Manchester City Centre right now, it's concrete and it's high-rise buildings. That there's no green space at all. So the vision of Victoria North is to have that high-rise building, but also to have more green space, where there's going to be a park coming up that's 1/3 the size of Hyde's Park. And as you can see on this slide here, where we're focused currently is Red Bank, which is the first phase of the master plan, and in my opinion, the best phase, simply because you're closest to the city centre currently, and you're very, very close, within a 5-minute walk to Victoria Station, and then you're throughout Manchester.
Yeah, and just to add to that, I mean, I think the parkland and the regeneration of the river is really important, just because it's a relic of its industrial past, I suppose. Manchester's industrial past, that is, that there's not really much green space in Manchester City Centre, and Angel Meadows currently being the largest of those, which I think is about 4 acres. So it's tiny. So having this, this green, sustainable, eco-friendly development in the city centre will be fantastic. So 115 acres this park will be once it's finished. So it's significant.
See here, this is Angel Meadowside, which is a completed development earlier in the phase. And what's also unique about it is the FEC office is on the bottom floor of this. So they're on the grounds, they're at the sites consistently. And you could just get some images just showing the finishings and the quality that they're able to finish at. This here is from Victoria Riverside, which completes around Q2 of this year. So you can just see the finishings and the specifications, very high quality.
Now, just to point it out, Spencer is here. So the development that's under construction, Victoria Riverside, sits here, well underway. It was great going to Manchester in December, and taking the team up there and meeting with the developer again. So really excited for clients that bought in this effectively phase one of the master plan.
And just to add on to this, what I found really interesting, especially because if you look at this picture here, it looks like there's a lot going on. Am I a bit late on getting into this? But what's funny is this is only accords to 8% of the entire master plan, which I found just fascinating, really, to what they're actually building and the scale of what this is going to be in the future.
Yeah, absolutely. I mean, just to place a few things, Manchester City Centre here, Angel Meadow, as we mentioned, the largest green space currently in central Manchester there. FEC's office sort of over here, the developer's office. Victoria Riverside here. This is the clubhouse, private clubhouse, which was served this end of the development. This block here is Falcon, which was 170 units over 20 floors. That's sold out and that's due to complete in Q1 2027. And then today's focus is Kingfisher, which is a 30-storey development, 322 units, a mixture of 1, 2 and 3 beds. And that is due to complete the second quarter of 2028. And then these over to your left-hand side will be the latter stages, latter phases of the development of Red Bank. And then this just shows you from another angle, that's Falcon, as I mentioned. This is Kingfisher here, and that's the other side of development there, Victoria Riverside. And you can see this will all be parkland here, and then Red Bank Riverside will come over this side, and sort of down this end, I suppose, there'll be a continuation of development. But mixed-use scheme, there's a lot of retail going down here on the high street, which I'll show you here, Danzig Street. So retail, commercial facilities. This is Kingfisher here. Here's the park. So if you were to have an apartment or a tenant were to live in Kingfisher, you walk out of your door, you cross over the road, you've got the coffee shops, restaurants on your doorstep, cross over the road, go to the park, go for a run, come to your left-hand side, go down to the clubhouse, which we'll look at in a minute, have a workout in the gym, go to the rooftop bar. And you can walk very easily this way to the city centre or down here to Victoria train station. So you're really right in the heart of it. Just flip through these, Spencer, in the interest of time. It shows sort of how the internal sort of courtyard areas will look. And some commercial retail facilities. Some internal images.
Yeah, I think even with all the retail that's going on, I really emphasize is the developer, what they've done is they put everything that people want, that tenants are looking for, into one place. So you have the outdoor space, they have that community feel. People are working from home, they want to just get some fresh air. It's all green space. They have all the facilities. So they've really hit everything that tenants are looking for currently in the market and put it into one place.
Yeah, I mean, it reminds me a lot of Canary Wharf, really, and King's Cross, and just, the vision, you went to either of those places 20 years ago, even Paddington to a lesser extent, and it's just transformed. And you go there now, and it's just, it's a hive of activity, isn't it? The way the residential blends into the retail, and just world-class restaurants there. Young professionals living there. You walk into work in the city. Very super exciting. Spencer, one of the major another major selling point of this development, I think, which is very unique, is the clubhouse, which is separate to the actual residential buildings themselves, which is great for service charge because it reduces the service charge, the facilities being external instead of internal to each building, obviously because there's more apartments using the facilities and the cost is shared. This is a 6-story building, the clubhouse, based a bit on sort of the design of Soho House, for those that are familiar with Soho House in London. £20 million to build it, lower floors, gymnasium, Pilates, workout studios, business conference centre, private dining, residence lounge in the centre, and then up the top you've got the rooftop bar and the restaurant inside. So, you know, I can't wait for this to be developed. Be super excited to see it all come together, and lucky residents who get to use the facilities. There's the private dining area, the residence lounge, that's the gymnasium obviously, and then this is your rooftop bar and restaurant, which will be on the top floor of that development. Spencer, would you like to talk over and sort of summarise the development and how it works and the process?
Yeah, of course. So essentially with the developer here, depending on the floors, the unit size, you can see here, 322 apartments, 2-bedroom units are starting from £375,000. Again, all the amenities that we had just touched on, which I do think is so crucial in this and why it makes it so special, because if you've been or you've rented places or even Airbnbs, for example, it says it has a gym or a co-working space. You'll get there, maybe it's one desk, or you go to the gym and it's a treadmill, there's a couple of dumbbells on the floor. It's just more of a box ticking exercise, where what they've done here is actually put in the state-of-the-art facilities, which is, it really is special. And just especially from an investment perspective, longevity of tenants wanting to stay there, people willing to pay more for that, it really is quite important. Yeah. But sorry, I went on a little tangent there, but the completion date for this is Q2 of 2028, and then the payment terms. So the payment terms, if you did decide you wanted to secure a unit, you would pay a £2,000 reservation fee. This takes the unit off of the market while we begin the conveyancing process. Upon the exchange of contracts, you would pay a 10% deposit of the property value. 1 year after that, you would pay either a further 10%, or it can be split into 5 and 5. So, sorry, put that into perspective. So you paid the 10% in Q1 2025. 1 year later, Q1 2026, you could pay a further 5%. 1 year further, Q1 2027, 5%, and then the balance would be due on the completion and handover minus your mortgage options. Again, just showing here, this is a 2-bedroom unit, which is located on the 9th floor, 2 beds, 2 baths, 762 square foot, and the asking price of $408,000. Sorry, it's lagging on my screen a bit.
No problem. I'll cover this bit if you want. So what we want to do with all clients is to be, you know, very transparent. So you have a very clear picture of how much equity you've got to put in, what the returns are, what the costs are, and so on and so forth. So this, just using the example on the previous slide, the 2-bed apartment, the mortgage assumption here, 60% loan to value, £244,800. Just breaking down the payment terms into numerical values. So £2,000 reservation fee payable on the reservation to secure the unit. $43,300 would be the initial 10% plus the legal fees, payable within 4 to 6 weeks of reserving the unit. A year later, you'd pay £20,400, which would be your further 5% deposit. 2 years later, you pay another £20,400. And then on the completion in Q1, Q2 2028, you pay a further £96,000. Of course, 60% covered by your mortgage. This is your 20% deposit and your completion costs, stamp duty, transfer tax, legal fees, mortgage costs, and so on and so forth, which would equate to a total equity requirement for £181,000 spread over the next 3.5 years to secure a 2-bed in Kingfisher. And then in terms of what sort of return you can expect on that, 130% return over a 10-year hold, on average a 13% return per annum. That is a culmination of your net rental income and the capital appreciation on the asset, and it's in relation to the equity invested. Okay, so quite a lot of information to digest there. Please come and speak to us, and we would of course be delighted to understand your requirements in a bit more detail and go into this in more detail and talk you through the numbers more sort of step by step and be, answer any specific questions you may have. In terms of the process, just to cover this very quickly, how does it work? So we establish your investment requirements. We select once we understand your requirements, we make recommendations of the assets and the properties that are most suitable to meet your investment goals. We then complete a reservation, require a copy of your passport, signed reservation form, and the payment of the £2,000 reservation fee. Once that's completed, the unit's secured, solicitors instructed. Within 4 to 6 weeks, you exchange contracts. That's when you pay your initial 10% deposit or 20% deposit, depending on which project you are investing into. Obviously, different projects have different payment terms. In the event of a Kingfisher, you would then pay further deposit payments over the construction period. Some projects you may pay your initial deposit and then pay nothing else until completion. So every project has different payment terms. But on the exchange of contracts, regardless, you would make some form of deposit payment. If you're looking to apply for a mortgage 6 months before the property completes and is ready for handover, then your mortgage application would be submitted. Your mortgage funds would then be ready for drawdown at the point of completion. Bank send the money to the solicitors. You send your money to the solicitors. They complete on the transaction. The property ownership is transferred into your name. The keys are collected. We would collect the keys for you. Our lettings and management business would collect the keys for you. They would start marketing the property, secure the tenant, deal with all the legal paperwork on your behalf, and then start collecting the rental income. And then you start benefiting from GBP rental income paid into your bank account on a monthly basis. So again, quite a lot of information to digest, but hopefully it helps to clarify roughly how that process works.
Yeah, I think it's also important to note just on that one, because there are a few third parties involved, whether that's the mortgage or the legal process. But important to note, we are the one point of contact throughout the transaction. Any issues that you have, any requirements that are done, it's just directly through us, just to streamline that process for you.
Yes, indeed. I just wanted to reiterate a few points, really, and maybe clarify. Maybe maybe we focus on one specific development there. We have a whole host of developments across the United Kingdom, different prices, different build periods, different payment terms, and they'll be suitable for different clients based on different clients' requirements. So the only way we can truly give you quality advice and tailored advice is, to have a one-to-one meeting, to understand your personal circumstances, and then make specific investment recommendations off the back of that meeting. So please do contact us. We would be delighted to hear from you. We will be in Nigeria, Spencer and I, in a few weeks towards the end of January. And that would create a fantastic opportunity to meet with you in person. Very much looking forward to seeing our team there, Hadisa and Kamsi, on the ground. And if anyone has any further questions following this webinar, please do get in contact with us. We'd just like to take this opportunity to thank you for your time and wishing you and your families all the very best for 2025. And we hope it's a great year for you, for us, and for the world. Spencer, thank you for your time. And I look forward to seeing you in person very soon.
Perfect. Thank you, George. Happy New Year, everyone.